It's been a while since companies had real access to public markets. So I think a lot of companies have not had this lifeline of public capital available. And it's exciting that it's reopening again. And now for some companies, maybe like Figma or some others, it's maybe even cheaper to get money on the public markets than the private markets.
All right, welcome back to Very Brief Short Report. It has been a super exciting season, and this week is particularly fun. Voss is playing a bit of hooky, and I have phoned a friend from our London office, and I'm super excited to have Zhenya Loginov joining us from London today.
Hey, Sara. Really excited to join you. Sad that I'm not at the same table, but we'll make it work.
We'll make it work. So we were chit-chatting a little bit before, and I think we're both coming off the heels of spending some time with a bunch of our founders. How are you feeling this morning post, I guess, like CEO offsite outside of London?
Yeah, we just had our team offsite just outside of London. So back this morning, we do this every year, kind of thinking about what do we do differently next year. Very excited, and just having the whole team for a few days outside is awesome. How about yours? You had a bunch of your US CEOs at the offsite?
Bunch of our CEOs together, welcoming a bunch of our new founders, new investments that we've made. And, I always leave these events and I feel like founders have this edge and this, and it takes a bunch of different shapes, right? But you see it in everyone, this edge, this ambition, this fire. And so you put all those people in one room together and there's just this like crazy kinetic energy that emerges. And so it's incredibly energizing, but I also feel like I've got a little weaker voice this morning from so much fun, talking with all these founders.
Yeah, I'll try to do most of the talking today.
Awesome. Well, we're excited for that because you have an amazing background. And I'm really excited for our listeners to get to hear some of your story and then now how you're bringing it into the investment side of things. Before we hop in, it's been a really exciting week in the markets and maybe especially in the Accel halls. We were celebrating the Netscope IPO, an investment we've been in for some time and one that I think came out at 19. I think this morning it's at 24. Sort of a reflection of the IPO market opening back up, and also a lot of enthusiasm from folks to around these great companies that are IPOing this year. What are you observing? What's sort of your impression of the market right now?
It's very exciting. I think, first of all, it's been a while since companies had real access to public markets. So I think a lot of companies have not had this lifeline of public capital available, and it's exciting that it's reopening again. And I think partially it's because kind of the valuations in the private market and the public market more or less equalized. And now for some companies, maybe like Figma or some others, it's maybe even cheaper to get money on the public market than the private markets. So it's very exciting that kind of the money is coming back into the system, is getting paid to the employees who helped build those companies, who are going to become, the next generation of founders, of angel investors, and see the flywheel going.
It helps remind us all kind of what the system looks like when it's really working. These early employees who gamble, with their time and really like deliver, so much energy and enthusiasm to a pursuit when it's very, non-obvious, and same thing on sort of the LP side, right? They entrust us with funds to hopefully come back with those funds multiplied many times over. But I think when you have these periods where there's lower activity of both IPOs or even the M&A market, you see those things both be sort of dampened, and so the energy that makes this ecosystem so thriving can be a little dulled. And so I think this moment where everyone's being reminded of the value creation that we can do is really exciting.
Yeah, 100%. And I think we're seeing that the companies are kind of slightly different than the companies maybe that have been going public before 2021, right? So I think before it was growth at all costs type of company. Now the companies have gone through, 3 or 4 years of really tightening their budgets and showing profitability and being just kind of much more seem much more of a sustainable businesses than some of the ones that went public before. And I think it's a different market. It's very exciting to be back.
Right. It's not that long ago that people were going public when when they still weren't making money, right? And so for folks to be coming out at the absolute numbers that are incredibly high, as well as really strong fundamentals, yeah, they're great businesses to be shareholders in. So, you have had just an incredibly rich operating career before coming to Accel. And so I thought we could just take a minute and kind of go through the different stops along the journey and hear about some of your reflections along the way. Amazing companies, Dropbox, Segment, Miro. We probably don't have time to go through all your greatest lessons learned, but I thought I'd just love to hear, maybe what drew you into the ecosystem in the first place, and kind of how did you land up working at those different companies?
I was a startup founder myself. I started a couple of companies, raised some money back 15 years ago in 2010. And actually in 2011, when I was raising my second round, was my first introduction to Accel. I met Sonali here in London for my fundraise among dozens of VCs that I met. That honestly was the best meeting that I've had with a VC at that time. So it was a highlight and kind of build the Accel brand for me. Eventually, I even sent an email. Hey, VC sounds like a great gig. I would love to join one day. At that time, it didn't happen, but now, 15 years later, Sonali and I are partners here in London. So that was my initial introduction to the industry. And then when I moved to the US in 2010, I decided that I would want to build a company eventually and wanted to go and learn from some of the best in the industry. That's how I joined Dropbox originally. Thought that it's going to take a couple of years, and instead it took me on kind of a decade-long journey across those three companies to learn and help founders.
What are the things that you really deeply internalized during that time of building and operating that you now look for or particularly attuned to when you're evaluating businesses and teams?
I think, first of all, sort of follow my passion for technical topics and technical founders. And when something is really complex, like it was with Segment product, for example, those are sort of type of founders that I try to focus on. All my companies tended to be in this transition from product-led growth to enterprise. And that's also the type of companies that I'm maybe more helpful to, B, that I really enjoy. I enjoy the sort of new go-to-market motion that emerged over the last maybe 15 years. And then finally, I think I focus a lot on the spikes of founders. I deeply enjoyed partnering, especially with Andre at Miro and Peter at Segment, and helping them build a company and kind of seeing how their super strengths drive really the success of the company. So I pay a lot of attention to kind of the founder personality even before the essence of the company. And then finally, all of those companies were kind of the leaders and the defining companies in their own markets. And I like when the company is sort of reshaping how the world works while building a profitable business. So that's the stuff I enjoy.
Maybe first on the PLG transition to enterprise, what do you think are the common mistakes? That's such a frequent topic of discussion, the evolution of go-to-market between those.
Yeah, 100%. I think the whole evolution sort of has been happening over the last maybe 15 plus years. One of the first companies was Atlassian, and then the company kind of along the way that perfected the motion were, from Dropbox and Segment and, Slack and GitHub and Notion. One mistake was kind of starting too late on this journey to enterprise and not realizing how hard it is. At Segment, we used to use the term kind of enterprise university, that it takes about 4 years to graduate and build a muscle to be able to win the enterprise. And if you kind of stop in the middle, you have the student debt, but you don't have the diploma. So it takes a lot of time. You kind of need to start early, go slowly, learn what those customers need that are very different. I think the other mistake that I've seen is kind of companies forgetting their roots and forgetting how that all of the pipeline really comes from the user love and from the kind of end customers that need to be focused at all times. So at Miro, we created specific kind of incentives for ourselves to not overly rely on the sales team, to not overly rely on enterprises that paid us, millions of dollars each, and put back kind of the effort and the team and the resources and the innovation into the end user experience. So those are kind of the two most typical ones.
You also talked about sort of being very thoughtful about how you can complement the founders. And that's also something that we spend so much time with our early teams about. There's not, you have to sort of be very self-aware of the strengths and weaknesses of your existing executive team to figure out what is the thing that will complement us, not just what in the abstract is the right profile for XYZ role. Maybe just speak more to kind of how you partnered with the leadership teams, where you've seen that executive team success be most productive.
I kind of feel a good executive molds themselves to the shape of the holes in the company that need to be filled. So from the beginning, I come from technical background. My major is mathematics and computer science. I've never done any go-to-market stuff until I joined Dropbox and then later Segment. But I felt that was the most kind of evident gap in the company, and that's where I kind of focused my resources. And I think shape of every company is different. Shape of every CEO is different, and what they need and what the company needs. And kind of you tend to I really love working with executives who can forget what they know and build on that foundation and kind of reinvent themselves together with the company that they are inventing together with the founding team from the ground up.
You mentioned sort of your technical background. I'd be interested to hear, you've got this technical background, you former founder, amazing operating experience. How has that kind of come together to inform, how you think and operate as an investor here at Accel?
I think I tend to lean a lot more on the kind of how do we build a company here question than on how do we make the money here question. I try to balance for sure, but I try to, I tend to jump into the questions of, oh, tell me a bit more about how you building your engineering team and what are the problems in the product, and how is your marketing working with your sales team. I find that founders find it helpful when they have somebody who has seen kind of the movie not once, not twice, but several times before, and can bring some experience in, but also kind of is open to new things, I guess, and to like building things from a new perspective. I find it particularly helpful for European founders to have this U.S. perspective from some of the best companies in the world to bring it here, and I tend to kind of do it with both founders who are in our portfolio and who are in my portfolio, but also with the founders who are just in the ecosystem. We organize a bunch of dinners and events, and those are, I think, very, very welcome.
Now, having been both operating in the U.S. and in London, what are your impressions of the European, startup ecosystem? It's been a geography we've been active in for a very long time. But you've joined the team just a few years ago. What have been your impressions?
I'll tell you sort of a personal story, right? I wanted to move to London after I graduated from grad school in 2012. And I saw maybe only a handful of really interesting companies in London and literally a couple of hundreds in the Bay Area. And that's why I moved to the Bay Area and spent a decade there. I think now it's different. I think in the last kind of 15 years, the share of VC capital that goes to Europe about doubled. The share of unicorns that emerged globally more than doubled in Europe. And there are a lot more exciting companies across Europe. A few things have happened. Kind of pandemic flattened the world and made it a bit smaller to the size of, I don't know, your bedroom, where you can, from this one room, hire anybody across the world, sell your product, build your product. And a lot of founders realize they don't necessarily need to move to build a huge company. And then many more built really interesting companies out of Europe, like Miro, like UiPath, like Celonis, like Klarna, and sort of showed the example to other European founders of what's possible. And then many more people are like, oh, I can really build a global business, a leader in the global market from here. And that was a part of my thesis of moving to London, that finally the ecosystem starts to have those feedback loops that work. And then finally, with the AI change, my thought was that, well, in the last 40 years, maybe, if you are a great engineer in China, in India, in Ukraine, anywhere, your first destination is to the Bay Area. And a lot of people, accumulated around Google and Meta and many other companies. But with the AI change, there is a new kind of population of very valuable people, which is researchers. And if you are an ML researcher in the last decade, you're about as likely to be in like Cambridge or I don't know, École Polytechnique as you are in MIT or CMU. And sort of the distribution of researchers is a bit more even around the world, which now kind of leads to some of those exciting AI companies like Lovable, like Synthesia, like 11 Labs emerging from Europe. So that was also a part of the idea that this market is going to continue growing slightly faster than the others and continue kind of producing really exciting companies.
And what has you most excited right now?
I'm really excited about the new crop of companies that are targeting the end users and starting with this product-led growth flywheel. So a great example in the US is Cursor. A great example, a couple of examples in Europe are Lovable, NA10. Those are kind of the companies that grow the fastest. Like for the first time, we have this list of companies, maybe up to a couple of dozen of them, that grew from 0 to 100 million in less than 2 years. That was really unimaginable before, and most of those companies tend to be PLG companies. But I'm most excited about kind of this extremely fast build out, and it presents very new challenges for the founders of those companies. Like previously, scaling the company to 100 million would take you many years. You would have the time to find your execs, to build a culture, to find the right people, promote them through the ranks over time. Now, if all of this happens overnight, there's very different mechanisms that you need to apply to build a company, and I'm very excited to help founders figure out how to do it.
Yeah, it's so interesting. It ties back to our IPO discussion, right? Of crossing 100 million and getting north of that. That used to be what the requirement to be prepping to IPO, and now it's something that some folks are hitting.
Less than 12 months even.
Right, exactly. Yeah, you've mentioned a bunch of these, really impressive AI companies being founded in Europe right now. I'd be interested to hear, what do you think makes the European market unique right now? What makes building an AI company there maybe, different from building an AI company here in the States?
I think historically, kind of building any company in California is quite different from Europe for a few reasons. Like most companies that get a lot of traction in the Bay Area start selling to other venture-backed companies, which kind of means two things. First, you get this very tight, very quick feedback loop from highly sophisticated buyers that help you tune the product very quickly, but also you get the traction very quickly too. The limitation, I suppose, of this is that, like, at some point, you kind of need to learn how to sell to real large enterprises because that's kind of the majority of the market, and that takes a bit of time and change of pace at those companies. In Europe, you really don't have a choice. Like, you need to start from real businesses, from your like UiPath of the world and Miros of the world needed to start selling to banks or industrial companies to begin with. And I used to say that a company that has $5 million in revenue in Europe has gone through so much hell to get there that they're probably ready to scale a lot more than some of the Bay Area companies. Um, Europe is also quite distributed, right? Like I remember that when I joined Dropbox at about 200 people, we were all still 100% of us in the office in SF, right? In Europe, it's very hard to do outside of very large hubs, and so you end up kind of first of all building for the global market to begin with, right? Companies now in Europe, AI companies especially, they almost never build for their own local market. They start even at seed stage building for the US, and like at Series A or even before, they hire people in the US or globally. Um, and then also they have to build different offices across maybe Europe or across Europe and the US far quicker. And so this muscle of being a distributed company comes much sooner to European companies than US ones.
It's already so fragmented that you're having, even if you're serving your neighbors, you're serving like a lot of neighbors, and then to your point, so much of the market is selling into companies here, so you have to kind of build for that from the outset. Do you have some predictions, some go forward predictions for the European market?
Mostly, I have hopes, I guess. Less so predictions. I mean, the big hope and big thing that we are seeing is just change the profile of the founders. If you think, we talked about this in our LP meeting a couple of weeks ago, that a typical founder in Europe 15 years ago used to be, McKinsey alum that is doing the startup for the first time, has no idea how to build a company, and is discovering all this for the first time. Now, your typical founder comes from Palantir and starts, 11 Labs, comes from Sara and Depict and starts Lovable. comes from another technical company where they've seen what great looks like. They've developed the muscle. They have a lot more of the network, and they're much faster, and they can build those companies. And that flywheel that we talked about, that sort of large, interesting companies spit out new generation of potential new founders and employees and angel investors, that starts accelerating in Europe. And that's what I'm most excited about seeing more in the next 5 years.
Right. It's such a testament to how it takes a while for those ecosystems to really mature, but just the advantage of once it's there. And it's churning out these folks who are prepared to sort of land much further on the curve. They will still have plenty of things to learn in their founder journey, but can kind of land them a little bit further along, having had those experience that taught them, some more about what it's like to build something from the ground up. Well, so fun. Truly miss seeing you more frequently in our partner room, but I'm so glad that we got to have this opportunity to introduce you to more of our listeners, share more of your operating experience turned investor experience. And we're just so thrilled to have you on the Accel team in London. And thanks for taking the time.
Yeah, I'm glad to be here. After a decade at Accel-backed companies, I'm glad to be on the other side. And super fun to work in the team.
Well, thanks everyone for tuning in to another episode of VBSR, very brief, short report. And we'll see you again next time.
Thank you, Sarah.